Hello everyone, this is Ross with Market Traders Daily, and this is today's video analysis for January 3rd, 2020. Today we're taking a look at the USDCHF, the US dollar versus the Swiss franc, for today's trade analysis. Looking here at the daily time frame, we can see the market has reached a low point, reached a support right into the mid to upper 0.96 hundreds, 0.9675, 90 is the green shaded area at the bottom of the chart. Also, a couple days ago, we spiked all the way into 0.9650, the orange zone at the bottom of the chart. Since then, been moving higher. It becomes a jumping off point currently for the dollar franc, finding its support, finding a base, and bouncing back up. It's not anything new really for this currency period. You look back here to the left hand side, and this became a base point and a jumping point for the previous uptrend. The same green shaded area, 0.967590, became a point of support, began a reversal, dipped back down to it a couple of times into the blue zone, and then began its journey higher as it made a new uptrend. Of course, we've come right back down to it in that same area here on the daily time frame. A couple of other things about this green zone. Not only have we seen historical jumping off or support point before, yesterday's candle is interesting. We spoke a good bit about this in the live trade room yesterday, about yesterday's candle and yesterday's close becoming a bullish engulfing candle. That's what we're going to term this one as, opening lower than the previous day closed and closing higher than the previous day opened and the previous day's highs. So becomes a bullish engulfing candle to show us potential reversal. And that's what a bullish or bearish engulfing candle can tell us, is that there's a infusion of buyers or sellers in the opposite direction and may give us a clue to potential further reversal. So we'll watch for further evidence of reversal. Remember, structures like this, engulfing candles, shooting stars, hammers, all of those types of candlesticks that imply reversal are just an implication. They're just that. They're an implication of reversal. True and actual reversal happens when you start to see higher highs and higher lows from a former downtrend. We've been in a downtrend. We're now going to start looking for higher highs and higher lows. Just like when the market was in an uptrend on the left, we started looking for lower highs and lower lows to give us a clue to a downtrend. So, yes, we have a bullish engulfing candle from yesterday, but we also would be considering the fact that we need to see higher highs and higher lows so we can confirm that reversal. But that's something to give us a clue to maybe what we'll look for. Higher highs, higher lows are something that will look to be established. We'll look to begin looking for breakouts higher above resistance and trading opportunities in that direction. So for the day today, we see the market holding above the blue shaded area. 0.972010 is that blue zone and going to be our intraday support. Now that we're above it, we look for it to stay above it. We look for it to use that as support, create a higher low, and we look for the continuation higher for the dollar franc. For that to happen, of course, we need to see similar execution on the USD, and we'll talk about that today in the live trade room as we did yesterday. 4-hour time frame here on the dollar franc. There it is. We're starting to see exactly what we talked about it, aren't we? Where we had the bullish engulfing candle on the daily, here we are starting to create higher lows and higher highs on the 4-hour time frame. So again, if we're going to trade this just like we could have here, you now see a higher low developing. Let me see if I can get this created a circle here. We see a higher low right here where the circle is, higher than the previous lows. So the next thing we're going to look for is a new higher low. Could be right here at the blue zone. We'll look for it to establish a support here at the blue zone and target the orange zone, which has already come close to the orange zone today, but look for it to stay above the blue zone. Now, the opposite is true as well. That reversal or changing of trend fails and is invalidated if the market gets back underneath the blue zone, or specifically under the green zone as well, if we start to see lower highs, lower lows start to develop. So right now we're going to start with yesterday's bullish engulfing candle. We're starting to consider looking for breakouts, dips to support, buying opportunities. Risk is known. We just don't want it to get back under the blue zone. So we know our risk is a break under the blue zone today, and even going into early next week, we'll consider this as part of our trading strategy for the dollar franc.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.